Good day, all. Ira Epstein of Linn and Associates with your metals market update, and this is for Wednesday, November 20th, 2019. Now, we're not at the very end of the trading day. We're at 1:55 in the afternoon, and I'm doing this much earlier than I normally do because I'm going to be out of the office and not returning this afternoon, so I wanted to get this done for you. Obviously, if you're watching television, you can't miss the impeachment inquiry, and you can see how the market is responding to it, generally lower. But is it responding to that, or is the market responding to a Reuters report today that it looks as though the Phase 1 deal between the U.S. and China may not get done now in 2019, may have to go into sometime in 2020? Does that mean we're going to see a December 15th kick-up in the tariffs? I would guess we would. Why would the president not get a deal done and just let the Chinese off the hook? I don't know. I'm not in his head. But I've been smelling this, writing about it if you get my reports, that I'm questioning what is the purpose of this Phase 1. If China wants you to roll back tariffs and just give you back the amount of grain they were purchasing, where's a win for the president, or what did we accomplish in a year and a half of this? They don't even want to discuss the infringement of stealing property, property rights, subsidies to their different businesses in different ways. I don't know. I think it's a mess. And the market's responding. Silver's pretty much unchanged on the news. The copper market, which is, I call it Dr. Copper for real. It has a better feel for this. That market is near the day's lows. Gold, which you'd think would get a bid out of it, did not. And you have got a bid that's holding up in the bonds in the note market. Now, another quandary for you is energy. Why is energy up so much on that? Especially today that Russia said that they are starting to break with OPEC Plus, and Mr. Putin, the president, said that they have produced more oil than was allocated to them. Give you that one. So when we look at the gold, and I'll turn around here so you can see it the right way, my brain was on something else, you can see that I think you're still in a down thrust. The down thrust is decided because the market is under the 18-week average of closes. So when it's under that, the bias is down. The thrust came in because the market, as you can see, has fallen down. The lowest recent close is 1462.90 after being up in the 1526 level, and the market's just sort of hanging here at this point. When we look at the chart action, I can't get very excited with any of this that we're seeing. When I put the swing on, I do see that we have higher lows, higher highs. That in itself is friendly. That's bullish. But the market's under the 18-day average of close, so that negates it. This is, to me, then defined as a short covering rally, a contra-trend rally of the bigger rally, and you saw that on the closing basis. And I have two resistance points, 1481 to 8770. Close over those, and I know that you'll call me, he's a trader. I'll get bullish. Stay under them. I've got nothing here. I'm not on a downtrend anymore on the daily chart, but I'm also, because the bias is down, the swing line's up, I have nothing positive there. When I look at Bollinger Bands, you had this one play from the sideways action, and this was back in the October frame. You broke down, came from this, let's call it this 1525 area roughly, got down into these 1540s. You've recovered nicely, about $40, but you haven't set up a real uptrend of lasting proportion. In momentum, you've worked out of an oversold condition. You could see how oversold the market had gotten, and that's what it seems to be doing. So I wish it would trend, but I'm not seeing it one way or the other just yet. When we come in together to the GLD, this should come up right now. There we are. It's the same pattern. It's a market that's had a correction rally, but again, the resistance is pretty strong at 139.53 to 139.45, the combination of the 100 and the 18. Something else has happened. Let me see if I can get here. Yeah, I should be able to get back to it now and make it go back. There we go. Notice how the 18-day was over the 100. Well, now, just now, the market has crossed over today. That's called a bearish crossover. If the market starts getting through the last break low of this 138.13, it will not be a good sign for those that are friendly the market. When we come over to, first we'll go to the juniors. The market is trading in the daily bar chart of the GDX, the Gold Mine Juniors, against the 18-day average of closes. The 45 is also there. I wanted you to see them. They're the same number, 37.66. The market is at 37.70, so for all purposes, it's gotten itself stuck right in that zone. Now, staying at 37.70, believe it or not, still keeps this market bullish because you do have the pattern of higher lows and you have the higher highs. I think we can see that the zone of the 100-day average is the resistance part. What would end the uptrend, not put it necessarily into a downtrend, is taking out this last break low right here, and that one was, 37.88 from the looks of it. When we take a look at GDX, the larger miner ETF, you're stuck again. How many days do you want to see action at that 18-day average of closes? And in this market, there is no trend. You have a lower low, higher high. I'm looking for a setup out of the market and haven't seen it just yet. The gold-silver ratio is correcting in silver's favor, but it's still, because the bias is over the 18-day average, favors the gold market on a longer-term basis. And in the silver market, I'm going to argue, like I did in the gold, that it's a nice bounce that we're getting. And because you lost an embedded reading back here, I'm still looking for a challenge of the closest key moving average, which is the 100-day in green, and that's where I think the market is trying to get up to. After that, hands off. I don't know what to do with it. Like the gold, you got two resistance spots, close over both. I guess I could say I joined the bull camp, but that's where I'm looking for the resistance to come in. In the copper, look at this battleground at the 18-day average of closes. You fought it back here for a couple of days, had one breakdown, and if you're a follower of my theory that the first time you hit a Bollinger Band, which was right here, that's where I think the shorts came out, you rallied all the way back up from there pretty nicely, 400, 500 points, actually 6 in looking at it. And now the market's in a stall. I don't see a trend in this market. It's a very difficult chart right there. In the platinum, well, you've rallied back to the red line, the 18-day average in the closes, and you sort of tired yourself out. The market's just sort of hanging there. It still has the pattern of lower highs, lower lows. It neutralized when it got over the 18-day average of closes. Yesterday's settlement was 917.40, right? If you look right on the 18-day, today's the first day over it. So I'll call it a stall right here. This has also been a heck of a vertical price rally from the 874 level up to where you're at. It's about $50. You're going to need something bullish to keep it going. In the palladium market, even though it's down today, it does, well, it's unchanged now. It's 1738. It's got the pattern of higher lows, higher highs. So it's negated the downtrend. It did that right over here. Watch this. You'll see the lower highs, lower lows, did it right here. And it's just following through today. You got to give the bulls something of the doubt here. There's a lot of resistance in the market up there. 1670.90 is the number you don't want to see taken out. Momentum up, bias up, trend up. I'm surprised I'm saying that. In the DC dollar index, higher high, lower low, 3 days in a row where you can't seem to get away from this 18-day average of closes. But I understand that. There's a lot going on. You got this trade war that doesn't seem to be able to get resolved. You got the impeachment hearings. You got another day of hearing tomorrow on TV. It's very rough, and you're just sort of hanging in these markets. You know, one of the things I like doing are what I call my video reports. And yeah, not everyone is going to be on the metal market or the currency markets or the stock indices, although a lot will be. But I did one this time in the grain markets, and I offered the price counts, the seasonal trends, giving you an idea what the weekly, the monthly, and the daily charts look like. And for those of you that like to look at technical ideas, I think you might want to look at this one. It's certainly interesting, to say the least. And I try to appeal to a whole audience. With that in mind, remember, if you want me to cover any special charts, all you do is on YouTube, write so we can see that. In the meantime, if you want to take a look at this, go to our website, www.iraepstein.com, and as you go up and you see where is it, it's under research, it'll say special grain report, and away you go. You can also click this icon if you're watching YouTube, and that'll bring you right to that page. I'm Ira Epstein. You have a good day. Talk to you tomorrow.